And and this is I have some support around here. I mean, this is where it held last time. So when I look at 4 hour, like on the dollar, for example, I had this line here, which it's tagging, which is kind of a breakdown area. So I think that we could get some kind of pullback here. Here's the line. See, that was a breakdown line, and that's pretty important resistance. So, and Greg was talking yesterday about an ABC. So potential that that we may be completing A here, and we get some type of B pullback, and then one more rally for the position sell in the dollar. That's kind of the way it looks to me. Can you come up with any narrative that would take the dollar down, correct this recent bounce from, almost 300 points, maybe back to 101.5? And that would probably be euro getting back up over 110 if that happened. So, this is a pretty good support level. I think it cleaned out a lot of the bulls that, bought this break and rallied. So, I can't get real bared up in the euro now. Up there at 112 when it couldn't do the job, yes. But right here, I don't know. It's, to me, almost a no trade. Is that the way you'll
I
see
agree
it?
with you. I absolutely agree with you, especially as it's doing nothing going into the CPI data. That's what we're waiting for now. It's been stuck in a 50 pip range for 2 days now.
Okay.
So unless maybe we see yields, continuing their climb higher and keeping the dollar bid, that might help euro dollar lower. But you got to be careful if you're short close to market, and it hasn't moved into ahead of the CPI tomorrow. You've got to be thinking about what to do with that position, whether you want to gamble it or pick up the pieces after.
Yeah. Because you look at this right here on the 10-year, this was my target, 4%. So it's not exactly exploding above 4%. That, maybe a lot of the rally is done off this bounce. And, Mark Chandler said yesterday, he sold his apartment in New York, and the proceeds are going into the long end of the market. So, this already was a pretty good counterintuitive pop in the 10-year from down here after the Fed eased. Maybe that's all we have here. So, what do you think about yields here and the yen continuing to make new recovery highs?
Yeah.
Yen looking okay.
I think about yields. I said before the Fed, a couple of weeks before the Fed, I think that yields are looking quite toppy, still in the 4%, 390s. So I was expecting to move lower, and then after we got the Fed, it flipped around and yields rallied. There was a piece out from Bloomberg saying that people are now short treasuries for the first time since April 2023, I think it was. So the market's done a bit of a flip because it doesn't see rates coming down as fast as was previously expected. But then you run to the other side of the boat, and if yields go up, 420s, 425s, that puts them bang on where the Fed's expected to cut for the rest of the year. And then you think, well, the Fed's going to continue cutting, those yields again a bit too high if they're up at 420s. So I think there's limited scope
upside
on either side of the trade once you get each end of the range.
Okay. Appreciate that, Ryan. Any comment on Yuan? I know you traded. It did not have the same magnitude of recovery of US dollar yen, but it did recover. What are you thinking here?
Yeah, I gave it a go when we first came down to 7 and got taken out of that. I wasn't all that confident on it. China's now seeing 2 daily losses on the trot after all their big bazookas and everything. And funnily enough, it was either Monday or Tuesday, Goldman's put out a note, 10 reasons to buy Chinese equities, and they've done nothing but dump since then. So hats off to those guys. But yeah, again, we're
Okay.
coming into the realm. It's all right threatening and acting and whatever, but it's got to produce results. And after a 35-40% rally or whatever, we've now seen 2 days of losses.
Yeah. So see how copper's responding to it. But here's this is kind of best of breed for China, BABA. It's not down as much, didn't give back as much either as the FXI. See, there was a bigger fall. So
Yeah,
maybe just a lesson for everything across the board, whatever sector or markets that you're playing. You look for the relative strength if you want to be long, and it's not the FXI. And you look for best of breed, which is, kind of like the blue chip in that country,
yeah,
blue chip tech. So there's Baba. I mean, even though it was a week or so rally, it sure was parabolic. But
yeah.
now maybe we just go through a big consolidation period for a while.
It's possible. We had the Ministry of Finance coming out saying that they may announce something on the 12th. So the market probably get a bit expectant about that again. So I don't, this is China, and they've got all their
Right.
financials and hedge funds in buying stocks and providing them with funds to do so. So I don't for 1 minute think we've potentially seen the end of this stock market rally. But maybe after this initial reaction, like you say, it's now going to go in a bit of fits and spurts rather than keep going parabolic.
Okay. I want to go to just something I'm keeping an eye on in the blue chips is Google was the weak sister. It had the biggest break, almost got back to the April lows, took out the July lows. But I think we're going to run when the S&Ps are at new highs. This is what I'm looking for. Google to fail up around 179, 180. I'll be buying Google puts up there, especially if the S&Ps are, near the higher end of the range of what people are looking for on the upside. So just this is on my radar as something I'm looking to short, um, and hoping the market blows off a bit more. Saw a lot of negative divergences and advanced declines happening there too. But I want to go to Kman. Good morning, my friend.
Good morning,
Uh,
Dale. Good morning, everybody.
So, I want to ask you, you traded the metals very well over,
Yep.
since we've been doing it. And, I saw a chart today that silver kind of held a breakdown on this pullback. Was this a break to buy here, or do you have levels that you're looking for?
Yeah, I either it holds here, and especially if we get a weaker, perhaps CPI tomorrow out of the US. But I am taking into account that there's a potential one more leg down to low 29s, perhaps.
Okay.
That's possible, but especially, well, I mean, China is it had a mixed reaction on China. If investors would buy China, I would buy silver with both hands and close my eyes and wait for it to go up to 35 or $40. But I think now we need to be a bit more cautious. Could have a bit of an extra reaction on tomorrow's CPI data. It could be enough here that I have a zone between 30.40 and 29.70 or 30 and a quarter and 29.70. We just went for a quick test and trying to bounce. But I on both silver and gold, I'm a bit cautious right here and now because there is a potential for a little bit more, and then we'll find out where they want to go. Yeah, it is possible that that line holds already, but
Yeah.
I yeah, I'm not in a hurry myself. But again, I mean, if we get weak CPI or if the market buys the China story, then we need to jump in.
Yeah. So this was the breakout test that a follower of mine sent to me. It's a good trader. He thinks the next leg's going to be, I think he's calling this wave 3. to the upside. So, you know,
And there
everyone
is
has different
potential for a bit more correction. I'd say
yeah.
so. I'd say so. But yeah, we will see. Time will tell. The market is extremely fluid right now, and whether it's on silver or gold. Um, Gold also came out of the triangle, had a quick test a bit lower, but then already just above 26, there is a bit of support. But then I have pretty decent support coming up in the 2580, 2590 zone.
Okay.
And then of course the prior break level there. That to me
Yeah.
is where it has to hold. If it
25, 30-ish.
yeah. That has to hold. And I know people are looking for those $100 to come down and go and retest it, but I'm not sure, you know. I mean, the situation in the Middle East is not of the sort of seeing any capitulation or any people getting nervous about those who are longer term, you know. Really, I wouldn't. I'm not going to turn bearish on gold unless we get back below that 25.30.
Okay, great commentary on that. You have anything to say about yields in the yen? I
Yeah,
know.
I think yeah we spoken about that
Yeah.
and on here and then on the flow show as well. I think for now, unless we get a surprising CPI print, I think we can range a bit for now on the yields. We've had the decision on the FOMC, then we had this big report on the jobs market, but the market is always doubting those data. Now it's over to the CPI. If it comes out as expected, I wouldn't think that we should move too much in the yields either. So I'm rather looking for a bit of consolidation here, but with the potential of doing those extra perhaps 10, 15 BPs. But yeah, in today's bond market, that's not a huge move. And for the dollar yen, well, people know that I'm a little long against most of the people in our room, but yeah, I think there's a potential to go and have a look at 150. And there's an interesting one that I showed today on well, actually half an hour or so ago on in our room as well. There is a potential for a head and shoulder to form, and the top of the shoulder would come in or could come in around 152 as well, where the daily cloud lies until Monday as well. The top of the daily cloud comes in at 150, 180 or 90, so around there as well. Get a real sticky CPI tomorrow. Why not? You know, why not?
Okay. So here's what Kman's talking about. You can't even see it on a daily. So this proves to me that Kman also uses a telescope. Okay, so this is what he's talking about. You know, the 140 area. We talked about that down there, that how
Yeah.
important it was that it probably would try and hold. And yeah, it could be a right shoulder. And then under 140, it measures big. You know, it measures down towards 120, but
It's
you would
big.
think 132 could be doable if we break down under 140. That's a
Yeah.
weekly moving average. So yeah, that's a good look. It would almost be more bearish if it falls short of the left shoulder and
Yeah,
can't
I
even
will.
get up there.
It is that is possible, Blake.
Yeah,
Dale, sorry, because I do have a trend line there coming in around 150.70, which is also 150.70.80 is also the 50% of the move lower from 162 to 140, and that comes in around 150.70.80. And that could be the one that makes it fall short, you know, of a full move
yeah.
back up to 152.
200 a week moving 50-22. You have anything there?
Mm, what is that? Is that the weekly?
Yeah, that's a weekly 50-week moving
Ah,
average coming
okay,
in up
yeah,
there. Just a
okay,
shade over 150,
yeah. I mean,
50-20.
looking at the volatility in yen, you don't pin your level down to one exact level. So I mean, if we talk about this 150.20, 150.78,
Yeah, right.
I mean, it's all within it's all within a move of a couple of hours worth in trading in yen, right?
Right.
We can move 200 pips in a day, so it's all within the zone, let's say.
So then, once you have a general zone identified, then you do the Ryan-Littlestone analysis and you go to the 15 and wait for signals. Okay. Right, Ryan?
Yeah, something like that.
Okay. Anyway, so if Ryan does it, it's okay to go to a 15-minute chart to like kind of pinpoint your entries. Hard to pinpoint your entries on a daily or weekly, right? So
Yeah.
some people don't go lower than 4 hours, but I'm not against going into you actually have you have some nice divergence here on the 15-minute. Doesn't mean much, but if you trade off the 15-minute, you have to also lower your expectations for targets. Okay,
Yeah.
at least initially.
Yeah,
You're not.
it's quite.
Go ahead.
Sorry, mate. I was going to say it's quite funny because for dollar yen, you at the moment with the amount of volatility in there, you might be better off looking at something like an hourly instead of a 15-minute. It
Yeah.
does the same thing, but that's just a volatility thing. You're always going to find your levels intraday on a 15-minute, but when you get high vol like this, then maybe an hourly is a bit more solid to look at. But yeah, otherwise I love me 15-minute charts.
Yeah, and it also helps you find a tighter stop, right?
Yeah, yeah. It sets
So
up
I mean,
the clean intraday levels.
yeah. So that's an advantage of risk management. Uh, it's not supposed to, generate 20 trades a day for your
No,
broker. Okay,
no.
you just use it to select. So I've learned from everyone here that I've worked with, and you can too. Now, we're talking 8 years of me doing this with the team. So, it didn't happen overnight through osmosis. It happens by spending time with the traders in the trade room and immersing yourself among everyone, not just for F.A.C.E, and then you're off on your own because, let's face it, not everything happens in the, from 5 to 6. Okay, so what do you do after 6? Is it productive? Is it collaborative, or is it just you sink back into your own mindset without being able to bounce ideas off one another? Think about it, because you're always better off having more than two eyes when you're trading. So let's bring the boss in here. So I know, Blake, that you're talking about 140, and that could happen, buddy. So
For
okay,
what?
Canada.
Yeah, I mean the dollar CAD has broken out. I'm going to continue on with this yen conversation
Okay,
here in just a second. But yes, the dollar CAD has broken to the upside. As we've been talking about for a long time, this 140 seems like an eventuality. It just had to shake out all the lopsided positioning, a couple months back when we broke through that 136 level. And now that we've created that false breakdown, obviously, if you listen to the week ahead video, I talked all about the false breakdown and is going to lead us to a breakout. It's just happening quicker than I thought. And I actually am now trying to position myself ahead of the Canadian jobs report with some other positions. If you guys are in the ForexAnalytix chat room, if you're in the trades room, you'd know exactly what I'm up to. So I'm not going to explain it here. But going back to the dollar CAD, we are breaking higher. We're at the 50% retracement almost, and it looks like we can continue higher. And all I have to think about right now is, man, what happens if the Canadian jobs report is weak? If it is weak, we're probably going to be trading close to 137.50 to 138. And while we're above 136.50,
yeah.
I mean, we closed at 136.50 yesterday. I wanted to get long, and then, or no, did I get long yesterday? I can't remember if I got long. Anyway, I just knew we closed right on the breakout point, and I kind of brushed it aside because Asia, we had the RBNZ overnight, and I didn't want to have too much commodity currency exposure as a result. But now the Canadian currency looks extremely, extremely weak. So
Yeah, and
yeah.
you got a nice little place to know that you're most probably wrong if we start closing back under 136.
Yeah, exactly. This zone right here, you get below 136, as you just pointed out. That's
Yeah.
gonna be pretty bearish.
Yeah,
You know,
good
I wanted to
confluence
go.
there.
What's that?
A lot of confluence there with moving averages and an important level all coming together there.
Yeah, that's the 50 DMA, the 200 DMA,
Yeah.
which, you know, obviously we've referenced a lot of that on you know, ForexAnalytix. If you're looking at if you're just reading the analysis, you know, the basic technical analysis every day, you know, we talk about the confluence of the you know, 50 DMA and the 200 DMA, and now that we've closed above 136, that's you know, gives us the ability for a rally here. And anyway, but yeah, dollar CAD definitely in focus this week. I want to go back to the dollar yen really quick, because you know, a couple weeks back when we were down here at the 141 level and we closed down here, you know, with the new prime minister, I had said, hey, you know, we're probably going to go back to the 148, 150 level, you know, and you know, because there's the whole market is very, very bullish yen. I mean, you know, every YouTuber, okay, let me just put it that way. Not every macro person, but most macro people, but most YouTubers were calling the, you know, yen is going to be the next straw that break. It's going to be the straw that breaks the camel's back. It's going to be the, you know, second carry trade coming liquidation that's going to collapse the market. And, you know, we were trading, you know, obviously down here. The market was very bullish yen, and they had to get shaken out. So always thought we would come back to 148 to 150. Kman made a good argument about the Ichimoku cloud, possible head and shoulder pattern. It's also the underside of a broken channel that we broke, you know, obviously several months ago, and the 200 DMA. So all the way up here between where we're currently traded to the 150 level. These are levels that I wanted to, you know, stick my claws into and start getting on the short side of the dollar yen. Last week, I shorted the dollar yen where we're pretty much at. Unfortunately, when we got down to 147.50 a couple of days ago, I only closed out like a quarter of my position. I should have closed out the whole thing. Obviously, can't live in shoulda, coulda, woulda land, right, Dale?
Yeah. You know what, Blake, I was just thinking, like, I'm having a hard time pinpointing where the buy is in TLT and bonds. And, you know, if we're looking for this to be head and shoulders top, that means there could be a very big bond rally. Okay. So I can't figure out where I want to buy TLT, but I can know when it's about time, when the yen is up around that 150, 151 and a half. So I'd be premature to buy him here. I'm just going to wait, and that'll be my key for when I buy TLT. So if you have conviction about a narrative, technical narrative in one market, that's correlated to something else, and you don't have confidence in that chart, you could use one market to be your key for when
Yeah.
you look to shift to lower, to yields peaking and coming back down again.
Yeah, and you're right. I mean, you can use, and I'm looking at that false breakout on the 10-year yields, and I'll go reference that here in a second. But I just want to make sure that you all know that if you're in the ForexAnalytix trades room, that means you are a ForexAnalytix subscriber. You can kind of see where our open positions are. Well, actually, you can see all mine because I post screenshots of my open positions here, so you kind of know what I'm doing. As you know, you got other traders like, you know, Ryan and Adam, Wuju, you know, Kman posting, you know, what we're doing. Other obviously a lot of other traders as well. But you kind of know where we're at with everything as we're trading it. So Kman said a little earlier he's on the wrong side of a lot of other traders in our chat room, or on the other side. I think that is a correct statement. At least he's on the other side of the trade from me. I just actually added more to my dollar yen up here, because I still think this area is going to pose a great level of interest to be on the short side of the dollar CAD. Going back to the yields and going back to the 10-year, let's get back over here. You know, the 10-year, we're probing this resistance. Yesterday, we actually hit a new trend high above those highs. And then we showed a failure yesterday, but today we're up this morning. And remember, we do have the FOMC meeting minutes coming out a little bit later today. But the dollar looks really well bid. I mean, you know, it's not just the dollar yen. You look at the euro. Remember, we're in a big long-term double top, right? We're in a long-term double top that does point lower. The only issue that I have with the euro is we are getting close to the 618 retracement. So if we hit, like, let's go intraday. If we hit a new low here, which is entirely possible, it looks like we might trade to 109.40. It's only 15 pips away. But what's intraday relative strength going to do? We drop another 10 or 15 pips here. That's going to be extremely divergent. You'll notice right here, looking like this, right? So if we hit a new trend low, which is more than likely, relative strength is probably going to be divergent, which means that if we hit the 618, we're probably going to bounce back. I've been since I closed out my euro dollar shorts earlier this week, I've been playing it on the short side. I've had open orders to short euro at 110, like literally every day this week. I think on Monday night, which would have been yesterday morning, I had an order to sell euro at 110.02. I was hoping it'd probe through the stops of 110. It got to 109.98 and then reversed. I still think that that's entirely possible. I still think we still trade back up here, but this is going to be kind of a range bound type of trade, probably until we have CPI and PPI the next couple of days. So I'd be very careful on chasing the euro dollar to the short side here, and probably you could argue that that would be chasing the dollar yen up at these highs right here, knowing that we have pretty big horizontal resistance. We have 161% extension of this is the new prime minister. That's the move following Ishiba. We're at the 161% extension. So chasing it up here around the 149, and change level is going to be a little dangerous, just like chasing the euro lower around these levels. So just be real careful with the dollar around here. The only one that looks, in my opinion, very substantial is the dollar CAD. This is a pretty big breakout, a retest yesterday and breakout. And that looks fairly like one that could be fairly violent and, having to do with what's happening with crude oil. And one thing that you guys didn't talk about, unless I missed it, Ryan, you'd mentioned something in the chat room about, and this is the parting thoughts just before we started this show, about what's happening in the Middle East. So can you give us a briefing for those of us that are just coming online here in North America? Can you talk a little bit about what's happening in the Middle East right now?
Yeah, or you can just read what you've got on the screen there.
Right.
So,
well, either if you kind of recap with your own words here.
It's just a bit of a theme that's coming up. Is it seems that Iran is putting some pressure on Hezbollah to maybe enter some sort of ceasefire, and the US is on that side of the park as well in trying to get them to do that. Which, if you get headlines that Hezbollah has announced a ceasefire, you're probably going to see risk trades rallying. But you need to be careful, because at the moment it seems like Israel doesn't give two monkeys about anything. They're going to continue to retaliate and do this retaliation that's still brewing, apparently. So be careful that we don't get flipped around on these headlines, that risk goes up on a ceasefire headline, and Israel goes, well, we don't care, we're carrying on with retaliation, and then it will do a 180, which will make it worse, because then if there's a ceasefire announced on one side and the other side doesn't abide by it and carries on going, that's going to create even more escalation. So the risk off move after a risk on move might be twice as bad.
Yeah, and that's you could see how you got crude oil that hit the 200 DMA, the 618 retracement. You can see this is the 618 fib level here. We
Yeah.
rejected that. We came right back down to the 50 DMA. We're holding above it right now, and this is the previous trend line, broken trend line. Yeah,
nice look.
It's holding. Horizontal support, 50 DMA, 50% retracement. I actually put in a pattern in play yesterday. If you guys can see here, I put that in yesterday due to it's slumping down to the 50 DMA. We have a confluence of supports you can see there. And if it is just kind of you get a bit of a reversal here and a bounce because you get a little risk off due to the news you're talking about. That's something to be paying attention to. And Dale, I know you have an interview right now.
Well, I'm a Forex guest hunter right now, but I want to comment on this Middle East stuff.
Okay, yeah. I actually was fishing for your comments, so let's hear them.
Okay, so when I was out of town, I don't know, it was most likely Fox News because that's where my friends is at. They put out a story that Iran is 2 weeks away from a breakout to have a nuclear weapon. Okay, now when they could have said, well, they're months away, they're a year away, but when they start floating stories like they're weeks away, Israel will not accept a ceasefire. They could stop firing, but this is the window. And even though the U.S. says that they don't want them to attack any nuclear facilities, if you were in charge of Israel and a country had pledged you're wiping you off the map, and they were 2 weeks away from a breakout with nuclear weapons, what would you do? So I don't think they're going to go for any ceasefire. I don't even know if they're going to listen to the U.S. about what they're going to target. So this is just Iran's play to try not get hit and make Israel look bad, because now all of a sudden they want peace. Well, they should have thought about that before Hezbollah actually started, escalating things.
And I'm glad you brought. I mean, those are all really very interesting points. But if you're Netanyahu and you're Israel, and there's a good chance that that you could be facing another Trump presidency here in the next month. Wouldn't you do everything that you want to do right now? Like if you really want to press, and I'm just speculating here. Wouldn't you want to press like the next couple of weeks, like do what you need to get done now before you have a potential President Trump strong arming you in several different ways that the Biden administration probably won't. I mean,
they have till January, because the election doesn't change the presidency. So
right, but
that's their window.
He would be very influential, and he would be probably stepping into the role ahead of his inauguration, I would think. I don't know. I'm just,
who knows?
Who knows?
It's a great point.
Yeah, I mean, that's just something that I guess if I was Israel, I would be thinking that, and I'm not saying, what's right, what's wrong, who's going to win, who's not. I'm just saying that if I was Israel, I would be thinking about those types of things, right?
Yeah. Oh. Yeah, definitely. Okay, great look. And Forex guest hunter, paging Bob Coleman. If you're here, let me know, because I've sent you messages. I've gone to Twitter. You're a silver guy. The market's hot. So where are you?
Speaking of silver, I want to talk about this. Stelios, the Greek typhoon on a yacht, who is not here to defend himself today.
Okay.
He stepped in, and he was in the trades room yesterday buying silver right down here at this breakout point. I think, if I'm not mistaken, let's go over to the trades room. Let's find out where he was stepping in buying silver yesterday. I have to go back and take a look.
3060s, in the 60s.
There you go.
3060s.
So, yep. You got long a third position at 3060. Right about where we're at right now. So you can see even Stelios, he'll pop into the trades room and let you know where he's picking up some positions in silver. So it makes sense. I mean, we're at the 38% retracement. This is support zone, and if it can hold above here, you know, it looks pretty constructive. But I guess the bigger risk that I see is just the false breakout. That's the one thing that worries me
Yeah.
just a bit about
Yeah.
silver.
Yeah.
And gold looked like crap yesterday. I know we held 2600, which is big. You know, if you are if you are in the ForexAnalytix community, you know that we were talking about 2600 yesterday. This is the bias chart that we do every morning on the morning edge, which with all the ForexAnalytix subscribers, it is a private show. You know, we basically came to 260304. Yeah, we went to 2604, started finding buyers, and you know, heaven forbid we start breaking that level. Look, I'm not a gold bear by any stretch of the means, but I can't argue why gold would go down. And I have a problem when I feel that way, that I would assume most other people feel that way too. And then that means it's probably a fairly lopsided trade at this point, like positioning wise. So I know you guys had a discussion about gold.
Looks like a bear flag right here, Blake.
Yeah, I would argue
Kinda.
that technically speaking,
Or a
we're probably
triangle,
looking
or
like a bearish pennant that's developing intraday. You know,
that would take it down to 25.5 or so if we broke down, wouldn't
yeah,
it?
and that would probably argue higher yields, higher dollar, maybe dollar
Right.
yen, you know, above 149.
Right.
You know, that would argue all that, and it makes sense. I mean, it looks like it wants to break. And Dale, this is your famous throwover, you know.
Yeah, it sure
That
is.
this channel is what Steve has been looking at. But let me mutilate his last name, Vargadis. So what Steve's been looking at, and he did the chart of the day a couple of days ago. He was pointing out this channel, and yeah, this could end up being a throwover. And if that's a throwover, technically, that takes us well back below this channel. So
Yeah.
so food for thought.
Good luck. Yeah, I remember you talking about being near that fib up there.
Yeah, the 261% extension, that the 2690 has been a big target for us for the last couple of weeks, and we came within a couple of dollars of that. So
okay, so I don't expect any military action from Israel until the week after this. High holy days next week. I don't think they're going to attack. They've been attacked on those, but I don't think they're going to do an attack till after that. So, just something to keep in mind as we talk to a very good silver guy who tries to protect the public from getting ripped off from physical dealers on spreads, etc. Educating people that if you want to buy physical, the things you have to look for to have a reliable dealer. So Forex Guest Hunter was successful. I found Bob he was hiding out on X he's coming out of his nuclear bomb shelter to talk about silver and what's happening in the physical market. So I want to thank the team again. As you can see, when Blake navigates around the site, just to give you an idea of what the content is like there, wouldn't it be nice for you to be able to do the same in about 4 hours when F.A.C.E has been done for a while? So thank you, Ryan, K, Blake. And, we're getting comments from an Israeli citizen that they're not going to stop too. And so they don't stop. Okay. So Bob, welcome back to F.A.C.E. Nice to see you. I think I have to unmute you. No, you're unmuted. So
hey Dale, can you hear me?
I got you, buddy. How are you, Bob?
Good. How you doing?
I'm doing pretty good. Nice to be able to talk to you. Things came alive in September. Is it the physical market? Have people come back in the fall? And with all the war news, how's business?
Yeah, I think if you could sum it up, the retail public is basically very quiet. It's been very quiet really since you started to see that run into past 2,500, 2,550. But what you have seen is the higher net worth buyer or bigger buyers, basically the size of the transaction has been more dominant, not the number of transactions. So, which is kind of strange because typically you don't see big money buying into a run up. You typically see the retail public buying into the run up. Of course, you're now seeing articles everywhere with Costco, and starting to get into platinum as well, and no one really has any numbers per se on actually how much Costco actually sells, because I think everyone's relying on this old Wells Fargo analyst guess of like 200 million a month, but I don't. Everyone I've talked to in the industry is like, well, I don't think PAMP can make $200 million worth of 1 ounce gold bars every month. So
Okay. So they're
there's a
not
lot.
able to fabricate, that kind of that kind of demand.
Yeah, there's a lot of speculation, I guess you could say, and then of course the gold dealer promoter type attitude is, okay, let's use it to try to sell more metal to show that there's more interest out there. But in reality, what's actually happening in the industry is the pie is getting smaller. So you're seeing more aggressive marketing amongst the dealers, the big online guys, for example. Zero Hedge now teamed up with, I guess, or with JM Bullion. So you're seeing this, you know, almost as if in front of the election, this all-in mentality of marketing to try and get more buyers out there. But I think, you look at Singapore, for example. I'm hearing Singapore is dead in terms of price action. The, it,
Chinese are still out of the market.
yeah, and so there, it's not to say that, people ask, well, what's driving the market, especially in September? And if you look at commitment of traders reports, it's really been the futures and options market more so than anything. The money flows that have come in. I mean, you're seeing each week the commitment of traders report, which is basically the measure of
Yeah.
open interest in futures. You're seeing $1 billion notional value of swings for example, in silver, either in or out from week to week, and that's just a massive pool of money. I think it's more traders that are getting into the market, trying to take advantage of these push, these quick
I mean,
moves.
big ranges. I mean, like the move just in 2 days. This move right here. Used to take months, and now it's
Right.
taking days for it to rally from 29 to 31, $2 in 2 days. We haven't seen that in a while. So do you like this $30 level? It's pulling back to this formations breakout. And what levels are you paying attention to if we take it out? People asking you, Bob, should I wait? Do you think there'll be a better price level, or buy now and hope you're early and buy more if it keeps going down?
Yeah, I mean, when you're talking physical, you're really talking long term. So the
Yeah.
idea is it's really difficult to catch the ultimate bottom. Unlike, if you're trading the market, you have tools to maybe use buy stops, sell stops, things like that. But for physical metal, the problem you try to run into is, like, for example, in September, when you see these big buyers come into the market, they tend to go after one single product. So you'll see, like, for example, gold eagles, backdated gold eagles, which were the premiums were really, really low compared to the brand new 2024s. Well, someone came into the market, bought a lot of gold eagles, and all of a sudden you just had a 1 or 2% jump in the premium, because of
One
supply
buyer.
available. Yeah, available supply. So what's odd is we're seeing um, certain products where deal or wholesalers don't have enough of, and then the other products that they have too much of. So
Okay.
it makes it more difficult for the physical guy that maybe is looking for a specific product. Now, with that said, You look at the cost of production with silver miners, which has been a good floor for the market. I mean, that's been rising steadily up. I think it's probably around 27, 28 at this point. So you could get a pullback, but what's interesting, not to try and dictate the terms of the market, but you have the election coming up. There's too many events right now, like you were mentioning with the Middle East and so forth, uh, uh, that makes this really difficult unless you're a very sensitive trader to maybe catch some of these spikes. Like for example, what was it, 2 days ago? We had a throw over to, I think it went up to $33 an ounce or close to that,
Right
and
here.
then it just got crushed. Almost like they squeezed the shorts just right out of the market, and
They
now they're
did.
doing the exact same thing to the longs on the downside.
Yeah, we'll see about the long side. You know what's interesting, Bob, and you made a great call. I think it was here when you started to move people more into silver than gold, and we had this correction in the gold silver ratio. And I thought it might top, but you have to keep an open mind. And this action now to me is looking more corrective than it being a peak. Almost like we had this big move and we've corrected the big move, and there's another wave to the upside to take out 90. Um, do you have a view on the gold silver ratio?
Yeah, for some of the research that I've been reading is that, yeah, if the market is trying to broaden out, for example, if the election comes in and you know, say Trump wins, for example, and maybe the gold market is pricing in a Trump win, which if you look at 2016 was actually negative for the metals initially after he won. You could see, well, maybe the issue here is that if the market's broadening, maybe gets sold and the white metals actually start to actually
Outperform.
develop some strength. Yeah, start to develop some strength, and the idea behind it is the economy actually doesn't go into a recession. Maybe initially into 2025, it actually maybe we continue to grow, and of course the whole idea is liquidity flows, and this hurricane is going to potentially inspire more stimulus. That's the old adage.
All right.
Lumber prices go up, everything goes, because they have to rebuild and so forth. You just don't. That's the hard part about the markets. Is it's right now it's being driven by events and liquidity flows more so than traditional uh, fundamental uh, uh,
Yeah.
action, I guess you could say.
Yeah. So, I'm getting questions about uh, platinum and palladium, and why do you think they've been underperforming gold and silver? They're also white metals. The white stuff goes first, that saying. But definitely it's been bringing up the rear. Platinum had a nice run though, but look at
Yeah,
how it's giving it up. It's giving it up, man. Yeah,
that
look
there's
at
only one metal that's more frustrating than silver, and that's platinum.
isn't
I think
palladium
it's yeah,
and
palladium.
palladium.
Yeah, palladium at least had a big run in late 2000 teens into the 2020s, but platinum, my goodness, it has just been a widowmaker really since the mid 2000s, after it's had its big run. Um, but the idea with platinum really is hydrogen fuel cells, and
Industrial.
then also this
Okay.
resurgence into the U.S. Department of Energy trying to push hybrid vehicles now instead of just all-out electric vehicles, and that actually may help. The combustion engine. It's not going the way of the dinosaur, I guess you could say. They're still going to make it. So the idea is maybe uh,
Yeah.
you start to get maybe a little bit more industrial demand, but that's the odd thing is gold being as high as it is, that may actually inspire jewelry into platinum more so than gold uh, uh, going forward. It's interesting because the platinum to gold ratio, I think, is historically, I think it's low as it's ever been. Uh, or
Yeah.
have
It
have
is. Yeah. Palladium looks better technically than platinum does right now. Just
Yeah,
what I
platinum.
see.
Yeah, platinum is more of a you could the traditional last 10 years or so, platinum has been used in catalytic converters in the diesel market, whereas palladium has been more used in the gasoline market for automobiles. Um, but I think with platinum, with hydrogen fuel cells, platinum is actually the metal of choice when it comes to that the energy conversion process. Um, but
I've been
it's
reading. Go ahead. I'm
no, no,
sorry.
go ahead. Sorry. Yeah,
Well,
go ahead.
a friend of mine sent me an article about how silver is going to be used in new battery construction that works better than lithium. Do you know
Correct.
anything about that story?
Yeah, that's something that came out, and it got vastly overhyped, I think, in amongst a lot of the promoters and dealers out there, saying that it's gonna, take over the entire silver market next year. It's actually something that is about a couple years out, in terms of possible production of battery of usage in that solid state type of format. But it definitely can have a huge impact because it seems like technology wise, it actually outperforms the traditional lithium battery and lasts longer with a faster charge. So from that standpoint, I think it's just another feather in silver's cap in industrial usage. It may start to pick up industrial demand potentially as maybe photovoltaic solar cell technology and so forth starts to maybe peak out with its industrial demand. So it's just another potential that could continue this supply deficit that we've been seeing and reported on by, for example, Metals Focus,
Forever.
which is yeah.
I mean, we've been hearing about this deficit forever. So, tell us about what separates you, Bob, from other dealers. In the intro, because you and I communicate, you kind of tell me about some of the shenanigans physical dealers are, what they're doing. What sets you apart, buddy?
Yeah, I mean, the big thing, especially the last few years, has been night and day is the premiums that we charge versus what dealers, traditional online and the big box sort of dealers charge. They built a model based on volume, and so maybe a lot of their transactions, their average size transactions, maybe $2,000 or $3,000, but their premiums maybe double, for example, than what we charge. So it tends to take out a lot of the purchasing power from the consumer. But what you've started to see earlier this year, late last year, is and this is where I have a lot of concern over the industry itself and the direction of the industry. It made a tremendous amount of profit from 2020 to 23. Now you're seeing the bids on these products. These big online dealers bidding $2 under spot for 100-ounce bars, silver 100-ounce bars, silver 1-ounce rounds, $3 under spot, $1.50 under spot. So what's happening is the public is realizing that there actually are true spread costs involved with not only buying the metals
But
and
selling.
potentially, yes, when you're selling back there. And so the market is really seeing a stagnation here where I think people have realized how much you know they overpaid over the years, the last few years, especially the people that have just got into the market. So they're much more savvy, I think, this time. That's why this Costco thing, I think, is, it's eating away the big online retailers. I think volume and operational business activity more so than like guys like me or maybe local coin shops. I try to be more of an advisor or I'm not a salesman, so I try to help people understand the metals markets. People see this stuff on YouTube and they go, "My God, the banking system's going to collapse in 2 weeks. I got to put everything into the metals." And you got an 80-year-old woman that listens to this and they're like, "I got to throw everything into the metals." And sometimes you got to step back and try to educate people and kind of unwind that anxiety a little bit. and walk them through, what's actually happening. And I always
So
joke
you
around
go
with them.
through suitability with people.
Yeah, yeah. You just try to understand the client. It's what I typically do as a registered investment advisor. You try to implement that same ideals. And so that
Yeah,
way
be a
it's
fiduciary.
yeah, yeah. That's what I tried to try. I try to always. And so what's happening in the metals markets now with retail demand declining here is a lot of these retail dealers that have set up depositories, and the depositories have very, very low storage fees because the whole idea was to dangle the carrot to the individual saying, hey, we got really low storage fees, you can buy from us as well. So really their bread and butter is coming from the transactional side, not from just simply being a depository. Well, what's happening is as transactions are declining, it's creating extra risks now in other areas of the business, in other areas of the industry, and I think that's something going forward that I think you're going to see become more prevalent, if we continue to see a decline in retail activity.
Okay, Bob. You have any chart you want to show? If not, I'm showing your website now, and that you offer storage. You're in Idaho, so pretty, not a high populated area. So that's also an advantage because you can store for people. Do people from outside Idaho ever come to visit and say hello to their metals?
Oh yeah, yeah. We invite that. If people want to audit their holdings, they want to make sure everything's fully segregated. Yeah, we invite that. And the one nice thing about Idaho is it's a very boring state when it comes to natural disasters.
Yeah.
Luckily we don't have that type of activity with hurricanes and earthquakes and that type of thing. But uh, I was gonna make a joke when I first came on because I was running a little late that I don't know which is worse, a hurricane or a Microsoft update,
Oh, okay. Yeah,
because we
that
had
takes
these
a while.
yeah, we had the patch Tuesday last night, and I'm like, yeah, so just trying to get everything back in order again. So
Yeah. I tell you what, Bob, I'll tell the audience, I've purchased silver through Bob, and everything went smooth as silk. So that's my real life experience to share with you guys. And Bob, great to talk to you. And any last words, not in your life, but for this interview?
yeah, no, yeah, I think the question is, is this now time for consolidation? We certainly, I looked at gold on the monthly charts, and you look at it crossed the upper upper Bollinger Band line on the monthly charts, uh, and for September, and typically that's usually where you could see a pause or some type of consolidation. I mean, we've done that before on this run, and then it's successfully kind of consolidated and then continued the run higher. But this right here, I think you're getting pause, which could be just the question of who may be winning the election. Was it
Yeah.
Kamala initially through August and into September, and now maybe Trump is maybe the expected winner? That may be something where, it's the old adage where basically, Trump is pro gold. So if the gold guys, if the one that the gold guys, or investors guy gets into office, they don't feel as stressed. Whereas Democrats, I put this statistic out there that twice as much gold buying occurs in Democratic administrations than it does in Republican administrations. So, that's those are just caveats to look at and try to understand how that affects the
Is
markets.
there a correlation between people buying gold and silver based upon party and people buying guns?
Yeah, I would imagine you probably have the same idea as well, in terms of gold and guns tend to move kind of hand in hand, I think.
Yeah. Yeah.
But yeah, it's the Democrats have been more avid gun control,
Yeah.
and so it's just that nature of
Yeah.
fear or
Yeah.
buying, that type of thing. So, but yeah,
Yeah.
I think I think walking into there's just between and then you always have China as well. The idea with Taiwan and
Yeah.
what kind of thing could come out of nowhere there, but it's this is we're walking into some after the election type of thing. And of course, we may not know who wins the election for a couple months.
Yeah, I
we've
agree.
been living in that type of environment for a while. But
Yeah.
you got to watch what the Treasury is going to do, liquidity flows. They're trying to manage or create monetary policy just from Treasury issuance activity, that type of thing. So a lot of stuff that just continues to, it's not simply just looking at one thing anymore.
Okay, Bob Coleman. You can follow Bob on X at Profits Plus ID. So look him up. Go to his website, check him out. He's got at goldsilvervault.com. Check out his prices, and you know what? Bob's a guy that you could even talk to instead of just talking to secretaries. Okay, so you're talking to the owner of the company, and anyway, everyone should have a little of this stuff. Maybe a lot of the stuff, but at least some. And Bob, I want to thank you and appreciate your commentary today. And I'll be talking to you in the new world in about 3 months.
Okay,
Well,
sounds good.
or the old world continuing. We'll see.
Yeah.
All right, buddy. Bob Coleman, everyone. And people are thanking you, and have a great quarter, end of your quarter, buddy.
Sounds good. Thank you.
All right. So that's a wrap. Everyone can join, and if you sign up, take the 5-day trial and go navigate around and hang out in the chat room and see what you're missing. You're welcome, Joe. Guys, see everyone, and remember, most of all, don't just count your bullion and your coins or your NVIDIA. Count your blessings. We'll see you tomorrow. You're welcome, Joe. Ingmar, see ya. Adios.